Now in today's video, I am going to show you guys a technical analysis procedure that I use to find key entries at key levels, okay, to get the right entries at the right levels. And I'm going to show you guys this from a higher time frame to a lower time frame. I recently did a poll and most of you guys responded and voted which type of video you wanted me to post out for you, and most of you guys voted for a technical analysis video. That is why I've come here to do this video for you guys. Hope you guys leave your thumbs up, feedback in the comment section, and also do subscribe if you've not subscribed to the channel yet. YouTube analytics shows that 80% of you guys who are watching are not subscribing. It is free, just subscribe. It will help the channel to grow and it will also motivate me to do more content for you guys. So today I'm going to show you guys a technical analysis procedure that I use, and I'm going to show you 3 or 4 methods that I use. This is going to include support and resistance, trend lines, and also some other tools. So I don't want to take so much time talking. Let's go onto the charts and I show you a breakdown on how I find trades based on technical analysis from a higher time frame to a lower time frame. And I hope you guys will enjoy the content. Leave me a feedback in the comment section, like as usual, and also subscribe if you're not yet subscribed. So without wasting any more time, let's go onto the charts and I'll show you how I go about this. We are on the charts and I'm going to show you a breakdown on how I do my technical analysis from a higher time frame to a lower time frame. Don't want to make the video too long because you guys don't like watching very long videos, but I hope that this video will help you to do your technical analysis in a better way. So today I am taking care of day traders and scalpers, as well as people who do swing trading. But yes, this same principle applies to people who do long-term trading. But today I am concentrating on mostly day traders. So we will use the daily chart. We'll use the daily chart as our higher time frame chart. Yeah, so what I normally do, this is what I do when I come to the market. I go on to a higher time frame depending on whether I'm scalping or day trading or swing trading. I go to a higher time frame to determine my directional bias or where the trend, the current trend is. Okay, so when you look at GBP USD right now on the daily chart, you see that GBP USD has been creating this uptrend, okay, for many days, okay, for a couple of months now. All right, so what you have to do to determine whether this is an uptrend is you look at previous market structure. This is what I do exactly. I go and see what market structure is doing. So last year we had lower low, lower high, lower low, lower high, lower low, lower high, okay, created this low here and created this high, okay, lower high, created this higher low, created that higher high, created this higher low, and then created that higher high, okay. So in this case, what I see is a shift in market structure from last year's downtrend to this lowest low, created a lower high, okay, lower high, lower than this high here, and then this lower high was broken by that higher high. After that was broken, it created a lower, and it created a higher low, which is a higher than this low, okay. So we consider that this market structure has changed from a downtrend to an uptrend. So now we are working with an uptrend, guys. So we can remove this. So after knowing that we're working with an uptrend, what I do now is I don't go back and look at all this. This is too much to look at because this is a long time ago. So what I do, I come and look at in this uptrend, which is the most recent high. The most recent high is this level here, okay? And which is the most recent low? Most recent low, significant low, is this level here, okay? So I draw those levels on just like that. Okay, let's take this out. After I've done this on a daily chart, I come down to a 4-hour chart. Okay, I come down to a 4-hour chart right here. Okay, come down to a 4-hour chart. So those levels I've drawn on are our higher time frame levels of support and resistance here. Okay, support and resistance. Now, what I do is on the 4-hour chart, I start to look for most recent change of market structure. Has the market structure changed to a downtrend, or is it still an uptrend? From this level of resistance, we see that the market changed the structure on the 4-hour chart to a downtrend, a short-term downtrend. How do you know that? You use the same method, okay? The same method. You get this tool. This was a high. This was a higher low, okay? That was a higher high created here, okay? And that was a higher low, okay? That was a higher high, slightly higher than this previous high right here, okay? And then this is a lower low, which broke below this higher low, this one, okay? So we have a change of market structure right there, okay, on the 4-hour chart. So what you do, in the 4-hour chart, you can mark out that low which was broken, right here. So you know that now the market structure has shifted to the downside. Now, on the 4-hour chart, as you mark this low, before this price action happens, this one, you mark that low. You keep on marking the lower lows, lower highs, lower lows as the market is going up, okay? The higher highs, higher lows, you mark them as the market is going up. So you've marked this as the previous higher low. Once the previous higher low was broken, you know that the market structure has shifted to the downside. So at that time, what you do is you also use a trend line. As I had told you guys before, you use a trend line. A trend line, you can draw a trend line here like this, okay? You can draw a trend line here like that. This can be your trend line there, okay? Because this trend line, once it's broken, and also market structure has been broken, you know that that is a confluence that confirms a continuous downtrend. So after you've done this, what I normally do is I go down to the 15-minute chart. If I'm day trading, go down to the 15-minute chart. After doing all this, I go down to the 15-minute chart and I come to the area where the trend line was broken. Here, come down to the area where the trend line was broken. Now, the moment the trend line was broken, here, what I do is I wait and see what the next candle will close like. Now, the next candle also closes bearish. That is when I place my entry at that area. I would place my entry there. Then I would put my stop loss just above the candle which broke the trend line. This one, just above it. Then I would target a 1 to 2 usually. Target a 1 to 2. You can see. Now, I don't want to tell you guys that all the time I'm always winning, because I'm not always winning. I've been going through a losing streak. Even if you check on the Telegram channel, some of the trades I've been posting out have been losing trades. It's not always a winning trade, a winning streak, no. Okay, so that is how I would go about getting or finding entries from a higher time frame to a lower time frame using only price action and technical analysis. Okay, now most of you guys will ask me, how would you do this in a real market? The same exact procedure that I have used, I would use it on a real market. Let me show you guys, because this GBP USD for forex.com, I use it just to analyze. This GBP USD chart for Owanda is the one I use. You can see up here, Owanda. You can see it has all my tools, my technicals drawn on. It has all my technicals drawn on. Okay, don't think that I just tell you guys what I don't do. All my technicals are drawn on. So here, this setup is not for day trading, it's for swing trading. This setup is a swing trading setup that I have. Okay, so this swing trading setup, I'm waiting for price to break this green line, which is the previous significant higher low. Once this breaks this green line and breaks this trend line, then I will enter a sell on GBP USD. So I'm waiting for this signal to play out, then I will take that trade. This is a trend line from a higher time frame. Okay, this is like a weekly trend line, that long white line you're seeing. So I use trend lines, and I also use break of market structure, support and resistance. So I hope you guys have understood this. It's a very simple approach that I use to trade the markets. You don't have to complicate anything. You just use this and it will make your life easy. You will make profit. Manage your risk, manage your psychology, and you'll be on your way to success. Thank you guys. So after seeing all that, I hope you guys learned a lesson. You learned something. You learned how to draw your levels, your key levels. You learned what to wait for, what to look for before you enter a trade. I hope this video will help solve some of the things or fill in some of the gaps you've been missing in your trading as regarding technical analysis. And I hope this brings new ideas into you that you can also improve on by practice. So as usual, leave a like, subscribe, and also comment down below. Until next time, peace out.